Welcome to Green Finance. Are you ready to make your money work for you? Well, look no further. Investing is the way to go. It may seem intimidating at first, but investing doesn't have to be complicated. With the right tools and some guidance, anyone can get started on their investing journey. That's why we're here to provide a comprehensive guide that covers all the essential aspects of investing. From risk tolerance and portfolio diversification to understanding the different types of investments out there. So let's get started. What is investing? Investing is an act of purchasing assets in the hopes of making money off of those assets either through capital gains or dividend payments. Investing can take on many different forms and there are various ways to make it work for you. Generally speaking, when it comes to investing there are two approaches, active and passive. Active investing involves taking a hands-on approach where investors research stocks, bonds and other assets and actively buy and sell investments based on their analysis. Passive investing, on the other hand, involves taking a hands-off approach by investing in vehicles such as index funds or exchange-traded funds, ETFs, that track the performance of markets without actively managing them. When you invest, you are essentially making a decision to use your money to acquire something that has the potential to produce more money in the future. Different types of investments. When it comes to investing, there is no one-size-fits-all approach. Everyone's financial goals are different, and so are the types of investments that could help you reach them. That's why it's important to understand the fundamentals of the various types of investments available to you. Here's a breakdown of some of the most popular options. Stocks. Stocks are shares of ownership in a publicly traded company, giving you partial ownership and a way to benefit from a company's growth and success. The stock market is volatile, but stocks have typically produced higher returns than other investments over time. Bonds. Bonds are essentially loans issued by either governments or corporations. When you buy a bond, you lend money to the issuer in exchange for interest payments over time. They may have a fixed or variable interest rate and can offer stability with less risk than stocks. Mutual funds. Mutual funds pool money from multiple investors into one professionally managed portfolio that can include stocks, bonds, ETFs and more. These funds give investors diversification at an affordable price point since they generally require less capital than buying individual stocks or bonds through brokers. Understanding the risks of investing. When looking to invest, you need to understand that there's some risk involved. Investment markets are often unpredictable, but with a good plan in place and knowing how to diversify your portfolio, you can potentially reduce the risks. Diversification. The most important thing for any investor is to diversify their investments. By diversifying your portfolio, you can spread the risk across different areas like stocks, mutual funds, bonds and even real estate. This way, if one area performs badly, it won't have as big an impact on your overall returns. Market volatility. Nobody knows exactly what the market will do over time because it's unpredictable and ever-changing. This means that the value of your money can drop if certain events occur in the market or if certain assets lose value. That being said, understanding the dynamics of investments can help you make better informed decisions and potentially minimize any losses. How to get started with investing. Getting started with investing is pretty straightforward, but it's important to understand the basics first. Here's a brief overview of the must-knows you should consider as you get started. Decide your goals. The first thing you need to do is decide on your financial goals. Are you looking to build wealth over time, or are you trying to generate enough money to buy a house? Do you have any upcoming expenses, such as tuition or startup costs? Knowing what your goals are will help determine which investment path is right for you. Figure out your risk tolerance. Your risk tolerance level is also an important factor in deciding which investments are right for you. Are you willing to take risks with high returns but also potentially high losses? Or would prefer a more conservative approach with lower risk and lower returns? Understanding your risk tolerance will help guide your decisions when it comes to investing. Research investment options. Once you know your financial goals and risk tolerance level, it's time to do some research into investment options that make sense for your situation. The stock market, real estate and crowdfunding opportunities are all viable paths that can yield good returns if done correctly. Do plenty of research and talk to professionals before making any decisions on which investments to make. Tips for smart investing. That way, you can make sure your money pays off, and you don't end up taking unnecessary risks. Here are some simple, but important tips for smart investing. Start with low-risk investments. Before taking on too much risk and investing in high-risk investments, start small and invest in lower-risk investments. That way, you can start to get used to the process of investing while minimizing the chances of experiencing any losses. Save the riskier investments for when you have a bit more experience under your belt. Diversify your portfolio. Having a diversified portfolio is one of the best ways to reduce risk while maximizing returns on your investment. It means that while some investments may not perform as well as expected, others may compensate for these losses by providing good returns. This helps ensure that your portfolio remains well balanced and that you don't see big swings in value over time. Invest for the long term. When it comes to investing, one of the most important things is having a long-term view rather than looking at short-term gains or losses. This means that over time, markets go through their cycles, and if you hold onto your investments for longer periods of time, moves towards success in terms of realizing profits from them over time. Resources for beginner investors. Ready to start investing? Great. There are lots of great resources out there to help you get started. Here are several you should consider. Online brokers. Online brokers are a great way to get into investing without having to break the bank. There are plenty of reputable sites out there, such as E-Trade, TD Ameritrade, and Schwab. Each has its own benefits, but all three allow you to buy and sell stocks with ease. Many also have tutorials on how to use the platforms and give advice on what stocks to purchase. Mutual funds. Mutual funds are a great way for beginner investors to diversify their investments. With a mutual fund, you can invest in a mix of stocks, bonds, and other investments in one fell swoop. Mutual funds can also be managed by professional money managers who can provide advice on how best to allocate your funds for maximum returns. Robo-advisors. Robo-advisors provide automated advice and portfolio management that can be tailored to your individual needs. These services typically require very little money up front, making them a good option for those who don't have the resources or knowledge yet to start investing on their own. These are just a few of the resources available for new investors, so don't be afraid to do some research and find what works best for you. In conclusion, there are so many ways to make your money work for you and start investing. In the end, it comes down to what works best with your financial goals, risk appetite, and resources. Investing is certainly not a get-rich-quick scheme, and the successful investors of today were once beginners themselves. With a sound plan, knowledge of the markets, and the right tools, you can start your journey towards financial independence and take charge of your money. Thanks for watching. Kindly like and subscribe to stay tuned for our next video.